Markets around the world just flashed red, but with the best investor of all time doing something very particular, what should we be paying the most attention to? In a week that is literally all about Nvidia, we need to discuss the options market. And of course, dark pool liquidity is on the rise as Wall Street starts to make some big moves. In today's special weekend show, we'll look at stocks, commodities, and cryptos to what's going on with yields, where are the best opportunities right now, and whether some markets can survive this volatility. Yes, there's a lot going on. Let's look at it right now together. Well, welcome back everybody to The Daily Show. This is our special weekend edition, and of course, we would be remiss not to discuss the biggest news of course, the best investor of all time. Berkshire Hathaway and Warren Buffett are doing some pretty good numbers, but on top of that, they're doing some record numbers when it comes to their cash holdings. And I wanted to put this in a little bit of perspective here in terms of the cash holdings overall. In Q1 of last year, Warren Buffett had a holding of $189 billion. That is now swelled to over $334 billion as Berkshire Hathaway stacks cash. What are they seeing that other people are not? Well, in today's video, we'll talk about this. And of course, we need to bring up that this is now his highest cash holdings ever, even before the global financial crisis. And he has done this one other time before, and it was a worrying sign. Now, of course, could it be the same? A lot of people argue it has to do with Warren's age. I would say he's unlikely to be tarnishing his legacy and likely to be following exactly what he's always done. So why could this be? Well, first up, let's talk about some of the worrying signs in the markets right now, and there are quite a few of them. We posted over on our X account, links in the description down below, that we are seeing quite a lot of defensive moves. And what this means is it's something similar to what we've discussed on the channel before. Healthcare, utilities, staples, holding up better, as you'll see in today's video, while the leaders of everything that's been the rally so far, Crowd, Net, PLTR, Hood, and many, many other stocks are all starting to see significant pullbacks. Could this be a sign that there is further selling on the horizon? Well, let's take a look at some of the biggest warning signs. Why could Warren Buffett actually be selling so much stock and, of course, cashing up? Well, a lot of it may have to do with home builders. This is the largest deep dark pool and largest transaction we've seen in like 15 years when it comes to one of the most important integral structure points of any economy, including the US. And home builders got the largest trade right at the tippity top. Since then, over the last week, we've actually broken to a new low, which we need to discuss. But do remember, home builders is very important. And we have just seen the biggest ever monthly outflow, if this holds for the rest of February, ever recorded. So basically, more people are dumping home builders than we've ever seen in history, even before the global financial crisis. Now, is that a worry? Well, when they go from being super bullish to super bearish, maybe something has happened. And of course, this is what we believe many people are starting to look for underneath the hood. The next question becomes, are people over leveraged? And of course, you will say straight away, yes, they are, Tom. Credit cards are up. We have huge moves in terms of the amount of leverage that's going into the ETFs. And of course, we're seeing margin across the board going up. But by some metrics, this one, we always want to show both sides here. You can see here by different income percentiles, we're not necessarily seeing the same amount of leverage from a lot of people. I would say that corporate leverage, though, is certainly very, very high. And do remember, there is a debt cliff coming in 2025 and 26 that nobody seems to even be discussing. And that could be quite hard to refinance if things start to get tight. What about record assets as well? We've talked about 3 times levered funds. Have a look at the growth, especially throughout 2024. That continues to accelerate, by the way. And of course, bonds markets, which have become incredibly complacent. Watch our last 2 videos if you haven't already, and make sure to subscribe because we've been covering that. When it comes to dark pools, we're seeing huge amounts of transactions in very tight zones, which could open us up to certain things such as Wyckoff and, of course, those types of distribution patterns. And we also see in the market this year that it looks like the best assets have been in kind of defensive areas. If you notice, things like utilities are doing a little bit better. Things like healthcare are doing a little bit better. And actually, when you take a look at growth stocks in particular, they haven't actually had a very good year so far in 2025. Now, is this a warning sign with leaders starting to become a little bit laggy, with, of course, markets turning defensive? It is very important, more so now than ever before, that we watch the options market, the big dark pools, and more importantly, the price action when it breaks key levels. And you'll notice here the net percentage of stocks at 52-week highs throughout most of the main sectors is not that good. It's actually not really making any waves here, and you'll see a lot of them have dropped off. So with all of that taken into consideration, is this really the time to panic in markets? Well, of course, Fridays notoriously have been bad this year. You can see Fridays have been net down across the board. And Tuesdays, Wednesdays, and Thursdays, with Wednesday particularly being the number one day of the year, we can see there is a clear sign going on here, which is the middle of the week's kind of bullish and the back ends of the week are kind of bearish. Now, could this be the seasonal weakness that a lot of people probably expect? We've shown this chart several times. Generally, you see a little bit of outflows in the back end of February, and we tend to see those inflow again back into March. And of course, that's the kind of traditional thing we see. The problem with this year is we're up, down, and all around. So volatility is on the rise, large moves are on the rise, and therefore we have to look at the most key levels, especially when you're thinking about buying or selling. Why is this? Well, year threes of bull markets tend to look more like this. And of course, you can see we tracked pretty well with the current bull market for both first year and second year. So that opens up this really up, down, and all around as we see geopolitical concerns, tariffs, all sorts of things starting to take hold. One trend, though, is starting to emerge. And this is one we've been discussing for a little while. Could it be time to consider bonds once again? Yes, treasuries, of course, do have some interesting stats. And this particular chart here shows you that when we saw similar things to what we saw back only a few weeks ago, we tend to have a breakdown in yields. And we may have just seen and witnessed a huge breakdown in yields. 10-year, 20-year, 30-year, all broke trend lines. And these could start some significant trends, especially when it comes to treasuries. And why could that be so important? We'll take a look here at the short interest when it comes to treasuries. Does that open up a potential short squeeze in the future to people going for defensives? Well, that certainly could be true because we are at an all-time high when it comes to short interest, and everyone has been hating on treasuries for quite some time now. Even the Druckenmiller, Stanley Druckenmiller, came out and obviously disliked that. From the positive side on markets, there are still some good signs. Things like undercutting the December low, then gaining into Valentine's Day. We've talked about this a few times. That could then lead into, of course, an overall gain for this year, although it may be up, down, and all around, something to keep in mind. We've also got one of these pullbacks most likely coming, which is the pullback to the 200-day moving average at some period. So keep that one as well. That could be even happening or starting right now. So we have to be on top of this. And of course, margins typically usually peak more than a year ahead of equities. So we are generally speaking not necessarily at the top when you're looking at the earnings season so far. As we know, Nvidia is very important, so we'll talk about that soon. But margins have been improving this earnings season, and you can see the volatility now is rising as we get close to the end of earnings season, and we see some of these more, I guess you would say, volatile stocks. Have a look here at the options market expectations from Earnings Watcher chart, plus 17, minus 17 for Lucid. AI, plus minus 16%. Nvidia getting up there near 9%. These are huge moves when it comes to the expectations of this week. And of course, you'll have to be on top of these, especially when it comes to the strategies. And some of the best strategies for earnings are usually options. Now, no, you don't have to zoom in. I know this chart's impossible to see. But when it comes to the positives for markets, just keep in the back of your mind this number, 1.16 trillion. Yes, that is the amount of buybacks coming in 2025, according to Goldman. And that is going to equal 4.64 billion per trading day. So when we see buyback windows open, there are obnoxious amounts of money coming in when it comes to buybacks. And of course, this could lead on to more further positive action when it comes to the markets. Of course, Tom Lee's very bullish on Russell 2000. A lot of you guys have differing opinions on that, but he has brought out this stat here, which is 4 years sideways on the Russell. Often when you're in the later cycle, that last little bit of a bullish move for markets in the overall kind of bull run that we're in at this stage, you can see small caps start to lead. That is certainly not the case though, based on price action. We'll give you guys the key level that we're looking at later on today's show. Most long-time viewers will know exactly what I'm about to talk about. So as we mentioned, the US dollar may also be falling off. If we see yields go the way that they've already done, breaking through those trend lines, that's usually a fairly good sign that the US dollar may be doing what it did during Trump 1.0. And you'll notice here that is generally down. Could that be good for gold? Yes, one of our best longs over the last 2 years. Of course, silver, possibilities, copper, and many other kind of markets, including the Chinese market, which will actually benefit if the dollar does start to print lower. The other things that are worthwhile paying attention to is number one, big trades in Europe. Everyone's been talking about Europe recently. It's been super bullish. That's all cool and all. But at the same time, again, it's a bit of a warning sign of potential consolidation. Europe may have just peaked for now, and we've seen, of course, a strong reaction of these large dark pool transactions. Now, to make matters even more complicated, and this is why we need to wrap it all up in today's video as we go through, we just saw a massive hack on crypto, sending markets across the board down. And of course, Bybit has since resolved some of this, but it was a $1.4 billion hack. And this was a huge hack. And of course, we saw them say they've covered it and everything. And I guess disaster or black swan style event averted. But this just shows you how quickly in 2025 things can go bad potentially. This was a big one, 1.4 billion, worth paying attention to. Volatility markets have seen a couple of dark pools down near the kind of lows. So of course, this is people betting on long VIX, something to keep in mind. We'll look at the price action in a moment. And of course, silver still has record shorts on it. China still has record shorts on it. And in general, you can see here the crypto market is, I would say, neutralized by the inflows and outflows. Although that hack was absolutely sending shockwaves through the market until it stabilized. So guys, let's have a look at what Wall Street is actually doing over the last couple of sessions. Probably comes as no surprise based on the OPEX options market, which is the big options expiration of every month, that we saw some big vol. However, take a look at the defensives. They were the only thing holding up throughout the session. And this is why we've said recently, especially in 2025, you want to almost have one foot out the door when it comes to the market. Leverage, probably your worst enemy this year. And on top of that, being defensive may actually pay because, of course, we're looking at one particular sector to potentially perform very, very nicely this year, and that is healthcare. They were the best three, and it kind of became the theme of the week, which were utilities, staples, and healthcare, along with a couple of other beaten down sectors recently, have been the best performers. So this shows you that Wall Street is certainly turning defensive near the top. And this could also suggest that maybe more pullbacks are to come. But let's take a look at the S&P 500, then go to the options flow. First up, what has been happening recently? Well, you may notice here a very important thing. That is that most of the large transactions are happening near the peak. The largest, most transacted zone is pretty much around 60.25. And this is actually near the all-time highs that we just reached. The other problem with all of this is that we don't seem to have that much strong buying down near the lows in comparison. Now, of course, if we scroll this across and we include this area, you'll notice that we get a little bit more of a bump down here in the 5800s. But there is an overwhelming amount of transactions around that 60.25 to 60.40 area. And I think this needs to be kept in mind when you're looking at these markets. And the reason why is because you have to open up your mind to what we call a Wyckoff distribution. Now, if you're not aware of what Wyckoff distribution is, I'd have to suggest you consider doing our advanced course. Links in the description down below, fxevolution.com, by the way. Or, of course, check out our day trading course as well, because we go into a lot of detail on it. There are only 3 ways trends actually change, and in a big way, and this is one of them. And of course, people are going to, the bears especially, are going to be looking at this and saying, is this a UT? Is this a UTAD? This is like the buying climax. And effectively, we are at a point here where the market is just selling huge quantities of stocks into us, the retail traders. Well, ultimately, we're not going to necessarily know that just yet because, of course, we'd need to break underneath the supports here. But it's something you have to keep in mind. And of course, we will be tracking throughout the next couple of weeks. It's another warning sign. Home builders, we've already said that looks a bit weird. We've been talking about the dark pools. We've been, of course, discussing this build structure because structure is very important. And it's nothing to do with what the news is. Remember, if it's in the press, it's generally in the price. It's very important to be building the data set, building the evidence towards a further pullback or not. At this stage, the most likely pullback, if we were to get a bigger one, would of course be to the daily 200 market, which if you go and load up any of your charts, you can put in a 200 on the daily, and you want to use an SMA, by the way, not an EMA, but you get the idea. It's going to be around here. So this traditionally always happens in a year, and this has always happened, as we showed before, always happens in a year after a year where we've gone bullish and not touched it. So when does it happen? 3 of 5 times are in Q1. So let's keep that in the back of our mind. Let's not panic yet when it comes to these markets, but also be paying attention. Now, what was the worst thing about the Friday's price action? Probably the worst thing about it was the sweep of this low. So we've been seeing a lot of bullish buying, and that had been all good. Even when it had gone under and gone back to these key levels that we were bullish at, 5,900, etc., 5,950, we always saw really nice wicks. Last week, we got doji near the highs, and we obviously rejected off this point and then took it during Friday. Now, what happened during Friday were so many puts stacked everywhere. There were puts everywhere. It was a Christmas tree of puts. And if you guys have ever fished, it was like seeing the Christmas tree of fish underneath the water in terms of the amount of puts that were suddenly coming through. Of course, we have the new options high and low levels, but what this took us into was negative gamma. And I want to talk to you guys about where we are in terms of all expirations. So, of course, where are we right now? We're at, of course, the first put wall, and we have a couple of put walls to be paying attention to. Basically, every 50 points on the next 100 underneath this level could be potentially a supporting level for the markets. We've talked a lot about positive gamma pushing towards 6,200, which still could be the case as long as things don't get absolutely wild. But as you can see here, this week, we seem to be getting a lot of puts stuck in the markets. Calls kind of dissipated across the board, and all of a sudden, 6,000 became the mega level. Now, at the time of this recording, we're at 6,013. So that could mean that 6,000 does get a bounce. Do remember there's a lot of money sitting on these 6,000 levels, which can act as a buying pressure. But if we give up 6,000, 5,950, next level the next day, 5,900, of course, after that. And if you have a look at the end of week expiration, 5,950 is the clear level. So let's say we hold 6,000, we drop underneath, you'd have to think 5,950 is going to be the level that you need to be watching. If we go underneath there, well, all bedlam could, of course, break out. And this is why it's going to be so important to look at the key levels and watch along with us. Let's now take a look at some of the other big markets. Of course, first up, Tesla, what's going on there? Sold off. We've still got that 320, 330 kind of put wall. So we've got a lot of strength there in terms of so many people have gone bearish at that point. It can help to hold up the price. And we'll be looking for price action in terms of how is it actually interacting with that zone throughout the Monday and Tuesday session. When we scroll over to NVIDIA, the all-important NVIDIA, you'll notice it looks very different. Okay, we sold off on the Friday, but NVIDIA is clearly waiting for the earnings market. And you can see everyone stacking 150 calls this week and 145s. And this may turn out to be good for them. I doubt it will because the volatility, as we're about to see in a moment, is expected to be bigger than the average. But as you can see here, we've got basically a point where we're still theoretically able to push into positive gamma as we're going up. So NVIDIA may hold the keys to the current market. So I think you'll all agree that the most important earnings of this season is NVIDIA. And in today's video, we want to look at a deep dive of what the options market is actually telling us about this stock right now coming into earnings. Are the options traders thinking there's going to be more volatility or less? And what kinds of strategies could you potentially be using? Well, luckily today we're sponsored by Earnings Watcher, and we can use some of their tools to figure out a little bit more. So just before we jump into the charts and take a look at some of the other key levels, let's check out the liquidity right now in the options market for NVIDIA. First up, I want to just quickly talk about one stat, and that is that you can select in Earnings Watcher a very quick way to figure out whether markets are undervaluing or overvaluing the move coming into earnings season. It's as simple as clicking full week, only liquid options, and then clicking on your favorite type of strategy, whether you want to go for undervalued ones or overvalued ones. Now, what does this mean? Well, it means that the implied move from the options market is less than the average overall move. And you can see there are quite a few opportunities this week when it comes to that. The implied move for something like snow is 12.39%, but the average move post earnings is 14.99%. And this can open up many different strategies in the options market for these particular styles of moves. Let's talk about moves though, because of course, Nvidia is the most important, and we need to know, what does the stock market actually think? What has also happened in history? And as you'll notice here, we have quite a lot of stats straight away from both pre-release, day of release, and post-release, and how Nvidia has stacked. Now, it seems like it's a little bit all up and around the round when it comes to Nvidia, but some stocks literally have really good pre and post kind of moves, and you can start to see a similarity sometimes when you apply price action, which of course we like to do on the channel here. What I think is most important though is when we scroll down a little bit and we start to take a look at the averages. You'll notice that the average move of Nvidia is 7.6%. We get the percentiles of both the top percentile and what it could move, and of course what usually happens in the middle. And we get a bit of an idea of when it's a beat, we're going to move around 6%, and when it's not a beat, we're going to move around 4.4%. Now, this is pretty important because as we scroll down, you're going to see the implied move currently is 8.7% for Nvidia into earnings. And that seems a little bit higher than the average normal move. And it can create an opportunity right now if you're thinking about potentially selling credit. Now, obviously there are risks and we'll talk about those soon, but you may notice that the move direction for Nvidia has historically been bullish. Now, some stocks you'll find are actually more towards the coin flip, and some just have amazing stats when it comes to overall bullishness or bearishness post-reaction. And the upwards move average is 9.2, while the downwards move is only 5.2 to the downside. Of course, you may say, well, this is the biggest earnings we've ever seen from Nvidia, and that could be true, but still, it's great to see the stats. Now, where things get a little bit more interesting is, of course, when we go to the simulator. And what we want to be doing here is taking a look at all of the long and short strategies that we could potentially apply. Now, of course, this we've just seen is that the market is implying a move of around 8.7-ish%, yet the average was about 7.6. So for some people, they may want to be looking at puts and saying, well, maybe I could look at selling some credit because I think that the move is going to be on average versus, of course, what the market's doing. And that is called a discrepancy, really, in these markets. Now, of course, there are risks here. So let's look at a 134 put and actually let's run the simulator together. And we're just going to press run. And all it does is it loads up here and it tells you kind of your strategies and what could happen in different scenarios. Now, of course, this is just selling a put and it depends on how the move works. But if we then select here that maybe the market goes down further, you'll notice that all of a sudden our P&L can look a lot different. So this is kind of good because it shows you straight away the risks. And what we find in options, and I'm sure a lot of you guys that have ever tested options before make big stuff ups. You know it. Everybody knows that's ever trade options. People sometimes don't see the risks. So of course, it's very important to be able to simulate both sides to see where the break even is going to be, to see what the stock price needs to be for your strategy, and to see whether this strategy even makes sense. You'll also get things like likelihood for success and all sorts of different scenarios there. But let's go over to some classic strategies where actually the program figures out some of the better possibilities here coming in, including straddles and strangles. And of course, all of these here are scenarios that you can use with the different expirations. So let's take a look at how the program can also help us to come up with more complex strategies. Short straddles and strangles can be great techniques, and you've noticed I've done a short on volatility. Then what we've been given is a couple of different outputs of different scenarios. So let's click on one of these and see what actually happens. You'll notice here we've given a price simulation, a break-even level, and of course the different P&Ls. But as you guys know, if we change prices, then all of a sudden you can start to get a bit of an idea of what happens in these types of worst case scenarios. And in this case, we might be doing a little bit poorer. Now, what I like to actually do is then follow the position. And if you're not aware of what's going on right now in terms of maybe what's going to happen in the future and you want to start trialing some of these, then you can do so. So as you can see here, when you follow a position, you'll be able to track how it looks in terms of percentages. You'll notice here that I've set up a position before, and of course we've set another one up. And the great thing is you can then track it through the earnings to see whether your strategy would be correct. And of course, if you wanted to do it, you could do it alone. Now, one of the best things about this video is, of course, the special deal. If you're interested in finding out more about Earnings Watcher, you can click on the links in the description down below and check them out. The big thing for NVIDIA here, guys, is really that the implied vol is slightly higher than the average, and of course that there could be some ops there. But the biggest thing of all is that generally it is bullish. Can it continue to do the same thing in 2025, which we know is being a little bit tighter than some of the others? All right, guys, well, let's now look at the leads. And the first lead indicator we always do is the options market of bonds. Is it freaking out? It did spike last week, but it's not in the danger zone yet. So we have to remain relatively calm, even though things are starting to look a little bit worse. There's no doubt that home builders broke bad lows. And of course, if you look at ITB, which is construction, you'll notice that that got very close to a significant low. And I'll load that up for you right now so you guys can see it. These are warning signs if you're an investor, if you're somebody that is looking at multi-month into multi-year. These are definitely not the signs that you want to see in a market, and it certainly is a cause for concern. When we move over to yields, you can see yields drop themselves, which opens up treasuries potentially being pretty good. And what we can do this week is we can set alerts underneath the low that was formed only a week ago. And if that starts to happen, we're probably going to drop the dollar, as in the dollar is probably going to move down. And this will be, of course, a go sign for treasuries, which have already shown, by the way, a really excellent weekly turnaround. So we saw a bullish hammer, a really nice rejection off what I thought was around the bull zone for buyers. We've seen, of course, a structural change. We've seen some dark pool liquidity, which basically means Wall Street's been buying. And of course, we're now seeing a really strong weekly close. So this opens up 94. On top of that, we also have short squeeze potential due to just so many people being bearish across the board on treasuries. And that's a pretty big deal. Let's have a look at the US dollar now. Still not down in that 105.70, 106 level, but certainly pushing its way there. That's following, I guess, the Trump 1.0 style in terms of paradigm that we saw before. And gold is, of course, benefiting from this, pushing higher. Will we get 3,000 this week? Ooh, that would be pretty exciting. But we've been looking for that now for 2 years, and gold still remains one of the best investments. What if they open up Fort Knox and there's nothing there? Would that mean that gold will go up even more? I don't know. We'll see. Let's move over to silver. Silver, as you can see here, it is coming down a little bit, but still ended the week relatively positive. It hasn't taken out the 33.40, which was the crunch level of the previous week, where basically we rallied up and found a massive dump off. It is quite shorted. We do know that this has always been paper shorted and kind of controlled by certain entities out there, if you guys have done your study on silver. But you'll notice that even if we pull back, there still could be decent buys on these lows. Things like 32.1, that could be okay. And if we break a new high, I'd be saying we're going to a new high and maybe starting to push into that $40 an ounce, which could be absolutely massive. For NVIDIA, as we alluded to before, there is an implied move by the market that's a little bit higher than the average. In terms of price action, we've come back down to the 20 and 50 moving averages, which can act as a little bit of a support. You'll notice, of course, from the general positivity, we still have positive gamma. But if NVIDIA gives up the ghost and again is unable to break up, you've got to remember this was actually a Wyckoff distribution that broke low. So by filling the gap, which is what it did, and that was a great take profit zone. Well done to anyone that took profit, because that was really, really good area before earnings. If we are not able to find that reversal, this could also be a warning sign that the market really is starting to tip, and that we might get that 200-day or even a worse sell-off. It is possible. Remember, this is the year. It's not like 2024 where it's much easier. We just were like, bull, 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 let's buy, let's buy, let's buy. Something happening in Japan, don't worry about it, guys, because we were able to see past it. This year is a little bit tougher from this perspective. So NVIDIA is very important. Key levels to watch, as we saw in the options market. We'll get more broadening of the options as we go through the week, as people stack both their bullish and bearish bets. So I would say probably around Tuesday before the earnings, we'll be wanting to look at that very closely. Of course, Monday, Tuesday will be important days to see how the market's trading. Now, on the defensive side, as we said, healthcare is looking a lot better. It's one of the best areas of the US market this year, and it just found a nice little bounce through the week. So, of course, are there opportunities within opportunities? Yes. You don't have to necessarily be trading the S&P. You could also be investing and trading in other sectors of the market, and that's probably what Wall Street's going to be doing this year. Tesla did give up, of course, 320, 330 is where the put support is, and if it gives that up, it could go way lower. It could be in the 250s if we actually lose those levels. HSI, as we know, China's been absolutely ripping. Well done, guys. I'll give you a clap because you know what? We've been doing that one together. So well done to everybody that's been in the China stocks. Totally against the press, totally going with the price. So we are going with the price. The price action's been good. Barber had a pretty good return. And I'm still thinking that we're going to get to 25,000 in the future. We could still pull back to the daily 20, which is probably the level to watch behind. But all green, all good for now. Let's take a look at the German 40. It looks like Germany may be starting to top out for this period. And again, the weekly 20, which is what we call mean reversion, may be the key level for people looking at the European markets. But as you can see, we've started to hit what I would say is extreme levels. And this pullback was warranted. Large trades near the top. Of course, a little bit too much exuberance, just pushing down for now. No structural base. The most worrying sign in America has to be the US 2000, a big sell-off, still around the most traded level, which of course we've seen plenty of times. Not a great candle, certainly not a great candle. And for you to really turn bullish, to think about the fun strat Tom Lee's concept or anything like that, it's going to need to break 23.25. So that's going to be a level you want to be watching for the future. We've had it up for weeks. We still need to see that. I'd be interested to see if this bounces this week. If it doesn't and it drops, guys, I know no one's going to want to hear this. If you're in US 2K, you're probably looking at a 2100 fairly quickly. So it's going to really matter whether the market can bounce here. That's critical for it. US 10-year, well, let's actually look at the NASDAQ. Let's have a look at the NASDAQ here. So the NASDAQ again dropped a lot over the previous Friday OPEX. We dropped 2.16%, which was less than Russell 2K, which dropped 2.88. But again, growth was the attack. And it's come back into this little area. So what we'll do is we'll pull a fixed range. And you can see here that we're getting close to that most traded, the 50 moving average. This could be a level where buyers start to commit back into it. Again, we're very close to those levels. So we'll be watching how the market structures up over this next couple of days into NVIDIA. Obviously, NVIDIA is going to be the catalyst, and then we'll have to go from there. When we take a look at Ethereum, you guys can see here the base is actually still holding. Yep, it held it through Bybit. But 2,600 base and, of course, 2950 really starting to show this thing's got strength. But holding for now, even on the smaller time frames. And Bitcoin, Bitcoin, Bitcoin. Long leg doji, long leg doji, long leg doji. What's it doing? It's at equilibrium. It's bored, guys. It's making a big decision soon, but we have not seen the breakout of the key levels. So, of course, we remain wanting that breakout of 99,000 plus. Get a close, still holding up. I still think the price action's looking all right. It's looking all right, but that Bybit was like, wow. When I saw that in the morning here from Australia, I was like, oh, that sucks. It's not really what you want to see, but price action is still holding. So we'll find out whether this one's good. Just remember, guys, while we've all been right on, of course, gold and China and all these other markets, the thing is that you can always be potentially wrong. And what you've always got to do is allocate your risk correctly. 2025, again, is harder. You've got to be more nimble. You've got to be more fast. Let's now take a look at the week ahead together. And as you can see here, we've got bank holiday in Japan, but then we scroll through, and as you'll notice, it seems like it's going to be a lot more on NVIDIA than anything else. As you'll see, the red news is not that big. Core PCE, which is the Fed's favorite read for inflation, is coming out on Friday at 8:30 a.m. New York time. But really, this is just a big storyline of NVIDIA. What happens? Are we going to see semiconductors lose any control and then the leader actually start to fall over? Or are we going to continue to see strength and it bucks the trend and destroys that bearish case of the Wyckoff? We'll be there covering it this week. As always, guys, if you enjoyed today's video, then please remember to subscribe, smash those links down below, and remember to check out the sponsor of today's video if you want to learn more about options and how you can potentially use them around earnings season. Obviously, remember, guys, there are risks and you must use those simulators to figure out things and, of course, understand your positions. Links in the description, links in the pinned comment for that. Thanks so much for watching. Have a fantastic weekend. We'll see you very soon. Bye for now.